Thursday. We're here to get started with Graham Dodge, the Vice President of TEDCO, and he's going to give us the morning keynote to get us started. So thank you, Graham.
All right, good morning, everybody. Thank you for having me. Thank you, Jackie and Matt, for coordinating all this. So I'll just say next slide, is that right? Okay. All right, go ahead, next slide. Let's get started. So who am I? Why am I here? What reason do I have to say anything about funding the future and as it relates to Maryland's economy? So first and foremost, I'm the Vice President of Venture Development at TEDCO. I'll explain what TEDCO is and go in more into that. I founded 6 startups. I founded a robotics STEM center and an open source initiative. I'm a patented inventor, alumni of Techstars, 500 startups and plug and play tech center, former EIR at Johns Hopkins Technology Ventures, father of 5, Adirondack 46. Are any hikers in the audience? Anyone hike mountains? Okay, all right. So those are the 46 high peaks in upstate New York. All right, next slide. So I want to take, oh, we got a broken image there. That broken image is the Wayback Machine logo. If you're familiar with the Wayback Machine, that's the Internet Archive that goes pretty far back, I think just before the year 2000 or started right around the year 2000. And that's where I want to bring you all back with me to the year 2000, back when Beyonce was still in Destiny's Child and hip-hugging jeans were still in vogue. And there was this little website that my friend Clay Grawl and I started called Not Films. And Not Films was the answer to the question of how do you publish videos in this sort of early .com era if you don't have your own server or website, you know, and you're not hosting your own user board. Where can you go to publish those videos? At the time, there were only a handful of video streaming services online. But it was mostly the domain of the major studios who were starting to publish their libraries. But the video content was about, like the video streamed in a square about this large, about the size of a matchbook. You had to choose your encoder. You had to choose Windows Media Player, Real Player, or QuickTime. So it wasn't easy. And what we wanted to do was create a space for anybody who could take what they had made at home and publish them as though they were, you know, American Film Institute students or professional directors. But there was one problem. Go to the next slide, please. This was the era of the dial-up modem. So if you wanted to send us your video, you literally had to take a VHS copy, not even DVDs weren't even popular yet at this time. Most people were still on VHS. You had to take your VHS copy, put it in the mail, send it to us, and trust that we're not going to lose your precious movie, and fill out this form that we included. This is all from the Internet Archive. I did not save these things. These are all things I was able to dig up at the Internet Archive of the Wayback Machine. So that's how you sent us your videos. So anybody see a problem with that in the year 2000? Right, okay. All right, next slide. 5 years later, broadband connections were much more popular. People had more broadband at home, and YouTube came along. And so it was much easier now for you to realistically publish videos and whatever other content you wanted to a website and be published and share it with your friends and family. So I'm telling you all this as it relates to sort of a key lesson in investing and entrepreneurship. So next slide, please. So, and just to reiterate, so here we are, year 2000, on the far left of the graph. There's my little startup, Not Films. One of maybe 3 or 4 companies aiming to bring streaming to the masses. I should also mention, too, the reason why we were able to do this is at the time we were working with a web development company that was actually encoding all of the Too Hot for TV episodes for the show Cops for Fox Television. We had that contract, and we were like, hey, we've got all this great encoding equipment sitting around. Let's encode our own home movies. And so that's how we were able to do all this and have the infrastructure, which was quite expensive at the time, to do any of that encoding. And in 5 short years, you've got broadband adoption, goes way up in households, and then the market at that point in time is absolutely ready for what came next, which was YouTube. So next slide, please. And this is a lesson that I'm referring to, that sometimes being too early is indistinguishable from being wrong. A quote popularized or coined by Tim O'Reilly. And this is a really hard lesson to learn as an entrepreneur, because your ideas are sort of precious to you, and you go to market, you think you're doing everything right, but then the market's just not there, right? You know, and all sort of questions aside about our go-to-market strategy with something called Not Films, but it was still like very frustrating, and this is the kind of thing that entrepreneurs deal with all the time. In fact, the most common criticism or the most common response that they will get from investors is, "You're too early." And it's hard for an entrepreneur to understand what that really means. So I want to take this lesson here and apply it to the world of AI and the world of blockchain. So next slide, please. So using that as sort of the metaphor, my own experience and the experience of so many other entrepreneurs who were too early, let's think about what that looks like right now in the landscape of artificial intelligence. If you go all the way back to 2017, you see this is the adoption rate of businesses with at least one AI function as part of their business. Pretty low back in 2017. However, I don't know, for those of you in the room who were sort of in this industry back then, people talked about AI like it was already there back in 2017. It was like, you know, there were sort of some jokes about the Turing test, but otherwise everyone thought, you know, they were using that term AI to describe machine learning and other kind of fundamental parts of AI, but they weren't really fairly describing what it was at the time because it was too early. But there was a lot of excitement around it, and there was a lot of great ideas that were conceived of back then. So I think a reasonable exercise, if you're trying to think of how do I reverse engineer this too early problem, look back in time. Go look and see what were the bold concepts back then that just didn't succeed or take off. And think about the fact that in many cases those ideas just were too early for the market. But as is the case with AI, the market is very much here. So think about how they would work today in the current market, in the current economy. Next slide, please. And I would hazard to guess that there's a role that blockchain plays in this as well, because blockchain, I also remember back in that time, blockchain was spoken of as though it was already here and it had already arrived. And in many ways, it did propel cryptocurrencies and things like that, but there's still a huge opportunity for blockchain that exists now that didn't exist, 10 years ago. So as it relates to AI, maybe AI is the broadband internet to blockchain, or vice versa. But this is sort of a thought exercise that I would encourage everyone to think through who's an entrepreneur who's looking to enter this market, and think about how blockchain and AI kind of support each other and provide the marketplace and the infrastructure for each other for these opportunities here on the screen. So, all right, so I want to use the next half of my keynote here to talk about TEDCO and talk about, how do we decide? So go next slide, sorry. So right, so how do I know if my idea is too early? Where do I find funding? Well, the good news is TEDCO and other investors like TEDCO have this lens, they have this perspective to help you understand, help guide you through various resources that we offer. Next slide. So a little bit more about TEDCO first. So TEDCO is effectively Maryland's Venture Fund. We're one of approximately 20 some odd states that offer state-funded venture capital programs, including Massachusetts and Pennsylvania and Michigan and Virginia. We're not the oldest, but we're one of the more successful state-run venture companies, venture funds out there. Been doing this for approximately 28 years. Initially, only exclusively investing in tech transfer and commercialization of research out of universities. And since then, we've evolved to more broadly invest throughout the state in various technology companies, various founders at different stages. Next slide, please. The overall impact of which, back in 2023, was about $2.7 billion in economic impact. So that's why the state of Maryland and other states are doing this. Next slide. We have 200 million assets under management currently. Next slide, please. And we don't just invest, we truly foster the entrepreneurial community. We work with various entrepreneur support organizations to sort of stitch and connect all of these resources together, along with the Department of Commerce and other state agencies, whereas TEDCO is actually more of an instrumentality of the state. We're not a state agency in the sense that the Department of Commerce is, which gives us a lot of flexibility to make decisions on our own in terms of the companies that we invest in. But our prime directive is to invest in Maryland-based technology companies. Next slide, please. All right, so this is really the slide that best explains at a high-level overview all of the funding opportunities at TEDCO. In red are all the dilutive investment fund programs, and in gray are the non-dilutive funds and effectively the grants. So as I mentioned, TEDCO started off doing tech transfer out of universities. That's now the domain of a sort of a subsidiary of TEDCO called the Maryland Innovation Initiative. They do a blend of grants for researchers and faculty developing ideas that could be commercialized, and then they invest in those ideas once they become companies. So that's why those two are, that one is blended. We also have the Maryland Stem Cell Research Fund, which, as it sounds, exclusively provides funding for stem cell companies and stem cell initiatives doing business in Maryland. We have federal programs that facilitate tech transfer out of federal labs, and we provide grant funding for that. In fact, we also provide matching funds for SBIR, STTR funding. If you've received those kinds of funds, TEDCO has funds that can match that. And then as you get above those three, you get more into what the sort of traditional venture model looks like, angel investing. So Ruby, the RBII, UBII, or what we call Ruby internally, is the Rural Urban Business Innovation Initiative collectively. That is part state mandated and part TEDCO funded. The state mandates the investments in rural communities, so we provide grants of up to $10,000 to any company that's building a technology platform in a rural county. That $10,000 goes towards funding a third-party vendor. So it doesn't go directly to the company, but we pay for a scope of work for a single invoice. If a company has something like that, we pay that invoice up to $10,000. We also provide $25,000 in dilutive capital through that program for these rural-based companies. We also invest in social economically disadvantaged individual founders in what we call concept capital, which is also $25,000 to $50,000 in dilutive capital. And then that connects anywhere in the state, not just rural communities. And then once you get above that level, that sort of $50,000 mark, you leave the domain of venture development, which is my domain, and you cross over into the traditional funds that are run by our fund managers, which is a different department at TEDCO. That starts with the social impact funds and what is called the builder fund inside of that. That is also for social economic disadvantaged individuals, but that provides up to roughly $200,000, $250,000 in capital. Next up is the seed investment fund. The next two are more like absolute traditional venture funds. One is sort of the seed stage version, the other one's the Series A version. but the seed funds goes up to approximately $500,000. Again, that's just based on any Maryland-based technology company growing their business here, and usually dependent on their amount of traction that they have when they apply. And then there's the venture funds, which goes up to $1.5 million as our largest single check size that TEDCO will write. In each case, you can actually have TEDCO be the only investor or the lead investor in, but if you have raised from TEDCO once before, then you have to find a second institutional investor to invest or lead the second time. But collectively, you could theoretically run this whole gamut and end up raising, well over $3 million in funds from TEDCO and Maryland Innovation Initiative, or MSCRF. Sorry. All right, next slide, please. So I mentioned that my department's called Venture Development. I just want to speak briefly on what that means. So we provide those earlier stage funds and a lot of backup support, wraparound services for entrepreneurs, including mentorship, advisory services, but then also those rural and concept capital funds, which we kind of see as like the friends and family round, not even pre-seed, but like pre-seed. And specifically friends and family for those who don't have a rich aunt or uncle. That's the idea behind it. And then we really, stick with you and do our best to help support you until you get to your first dollar of revenue or beyond, and help celebrate those successes with you. So it's sort of like an accelerator program within TEDCO, but we're not defined by a period of time or a cohort. All right, next slide, please. Here's a handy overview of the entrepreneurship programs that TEDCO offers, or that my department offers. I have mentioned almost all of these, but there's also credits with like AWS. We're working on getting some Azure credit programs stood up as well. We have access to something called IP Gen, so if you're looking to do a patent search or you're looking to do a provisional patent, it's a self-service platform that we've invested in that we make available for free to founders here in Maryland. So you can apply for access to that platform. We have something called Prelude Pitch, which is like a safe space where you can come and pitch your idea to TEDCO staff and advisors and get feedback from us directly without doing it on stage in front of hundreds of people or on Shark Tank. And then we also have a program called Loaned Executives and Network Advisors, where we have a bench of about 115 network advisor consultants, contractors with different degrees of expertise in various industry sectors, different disciplines. We make them available to you for up to 4 hours of free pro bono work. And then at that point, you can apply to have them be a fractional executive on your team, which TEDCO will pay for, up to about $6,000 or $7,000 in their initial engagement with your company, which is roughly 40 to 60 hours at about $150 an hour. All right, next slide, please. And we have, go back one more slide, sorry. Ecosystem. I just want to touch on the Equitech Growth Fund real quick. This is one of our big grant programs. It wasn't on that earlier chart, but it's relatively new. This is a grant program that goes from about $250,000 to $1 million, depending on whether or not you're standing up workforce development initiatives to provide upskilling for technology careers. We fund those at around $250,000. That's a grant. And then if you are interested in actually building out manufacturing infrastructure, and you're within a lighthouse industry in Maryland, and you are going to be creating jobs with that money, we go up to $1 million for that fund. We also support maker spaces. We support student entrepreneurs in the Baltimore MSA through the Pavel Lepere Innovation Grant, which is a $50,000 grant for student entrepreneurs. All right, so next slide, please. And all of this kind of comes to a head every year at TEDCO's Entrepreneur Expo, which, if you're not familiar with it, is the largest gathering of entrepreneurs in the state, usually around 1,100, 1,200 people and growing each year. It's a day-long event with speakers, keynotes, breakout sessions, exhibits, exhibitors. It really is a great place to come network if you are an entrepreneur or you are working in that ecosystem at all. You can scan that QR code to register. We'll have some interesting panel discussions on blockchain, quantum, and AI as well. Next slide, please. And if you want to go, but you can't get to Baltimore, you don't have the right transportation, let us know. Scan this QR code, and we'll have a bus or a shuttle work within your community to come pick you up. So this is something else that TEDCO funds, but we just have to know who needs that kind of help in getting there. Whether you're in Garrett County or all the way down St. Mary's, doesn't matter. We will coordinate a bus to pick you up. All right, next slide, please. All the images here broke, but this is our how to get in touch with TEDCO slide. All of our handles on social media. If you don't subscribe to our newsletter, please do so. Next slide. We have an events calendar that if you have an event like this one or any event, you can actually submit that to TEDCO, and we will put it on our own events calendar for you and share that in our newsletter and cross-promote it. We also have a speakers bureau within TEDCO, so if you need a speaker for your event, like me here today, you can do that through the website as well. All right, next slide. And that's it. So here's my contact information. Please feel free to email me if you want to follow up with anyone at TEDCO or myself. I'll send you a calendar link, and we'll get something on the calendar. Thank you very much. Yeah, we have a few minutes for questions if anybody wants. Yes, sir.
Chris, I'm an entrepreneur in Maryland, and I've actually talked to TEDCO a number of times. What are your hot verticals right now? We're in agriculture, and I noticed that that's not really a focus area. There's a few farmers, but agriculture doesn't seem to be one of your focus areas.
Well, anything in ag tech would be. But oftentimes people assume that the Rural Business Innovation Initiative is for ag tech. It's not. It's for any technology company building in a rural community. Sometimes that tends to be agriculture, technologies. But no, we're kind of industry agnostic or vertical agnostic in that regard. The verticals that we are talking about a lot right now are quantum and AI, of course, is still very much being talked about as that evolves, and we see more companies being built on vibe-coded apps and stuff like that, and the various challenges of that. And then, of course, medical, healthcare-related applications and companies are probably one of our biggest industries that we've invested in over the years, just by virtue of our proximity to NIH and Johns Hopkins and University of Maryland. So I'd say those are probably the bigger ones. Cybersecurity is always sort of ever present, but we're not one of those specialized funds that invest specifically in cybersecurity. There are those out there like Data Tribe. But yeah, so I'd say healthcare probably dominates our portfolio. And then we have a strong interest in getting in on quantum-related companies, given that the market is finally maturing for those companies, and the infrastructure for that is starting to be a little bit more stable. Any other question? Yes.
Really great presentation and a lot of information, a lot of very helpful information. Matt Rogers from Los Angeles Maryland Association. Where so many pathways it looks like to interact with TEDCO. What's the sort of where does the entrepreneur open the door to begin the conversation? Do they send an email? Do they attend the event? Do they schedule a meeting with some of the
Sure.
leadership or the pre-council?
Thank you, Matt. So Matt's question is about what's the best entry point for TEDCO for resource navigation, et cetera. I'd say it's me, in my department at least, because we do have sort of the broadest perspective, and we tend to interact with founders in the earliest stages. However, the investment team would say, check out their Investor Open Forum, which is the last Wednesday of every month. It's on our TEDCO event calendar. That's one of the few opportunities where you can actually interact with the fund managers at TEDCO and get their direct sort of input on any questions you may have about funding from TEDCO. because within each fund are different buckets of money that have sort of different rules and regulations, and that's really their domain that they can speak to, because otherwise you can't talk or solicit feedback from any of our fund managers because of regulations around not sort of leading an investment and not showing any kind of favoritism. So they purposefully plan a monthly open forum where anyone can attend, where they can openly answer questions for people. Any other questions? Yes, sir.
When you find yourself in that space where you're arriving kind of too early to ideas, which is like oftentimes where we're at, where so many things are exponentially rising, what kind of advice do you have for entrepreneurs that are operating in that space?
That are already, they know that they're too early?
They find out you're too early, like you're not finding PMF yet.
Yeah, no, and I've been too early a number of times. Despite my experience being too early, it's always a little surprising when you realize, damn it, I'm too early again, you know? And that's even more problematic today, I think, with people leveraging AI to get input. You know, AI will encourage you to do so much so quickly before you've done any kind of market validation whatsoever. So two bits of advice. One is be prepared for the long game, right? Don't sort of blow all your resources right out the gate. Really kind of get feedback as much as possible. Protect your resources. Be conservative with them as you go to market and test the market. There's also a program, I showed it briefly on a slide, called iCore, which is the National Science Foundation's Innovation Core, which really it takes basically the scientific method and applies it to entrepreneurship and market validation and value propositions. So if you do have an early stage company, and especially if you're unsure about the market or if you have heard the market's too early, I would recommend joining one of their cohorts. University of Maryland hosts it in College Park. They're all remote usually or hybrid. So anyone can join from wherever in the state. And then Johns Hopkins also hosts an iCore cohort, I think quarterly or biannually. So I highly recommend the iCore program to put you through the paces on actually testing all your assumptions. Yes, ma'am. Oh, everything from biotech and therapeutics to medical devices and software applications that serve the healthcare industry. Yeah, so that's in our mandate as a organization from the state. It has to be a technology business or a technology-based business. With the advent of AI and other sort of technology enablement platforms, that line is getting blurred every day, even more. But at the end of the day, we still have to go back to the Office of the Attorney General and justify every single investment. And they ask the hard questions of how is this a technology company? And if the founder or us can't defensively explain that, whether it's because they have intellectual property, would be one reason to say that they're a technology company, or that the technology that they are adopting or is enabling them helps them scale like a SaaS company would scale, where you can get to 10 to 30 times your valuation in 5 years. If that's true, then we could argue that that's a technology company as well, so long as technology is playing a role in the development of that roadmap. By the way, that is the litmus test for most of the investors in venture capital. If your company can't defend a 10 to 30 times valuation in 5 years, you don't have data to support that, then it's not going to be venture backable. Doesn't mean it's not a great idea, and it's not a great business that can receive other types of funding.